All right. Let's dive into something that can be kind of a pain for us self-employed people, taxes.
Yeah.
We're going to tackle those self-employment taxes in the U.S. today.
Okay.
Think of it as like a crash course
All right.
on what every independent earner needs to know. We're going straight to the source for this one.
Oh, cool.
IRS Publication 334, Tax Guide for Small Business.
IRS Bible.
It is. It is. And
That-
we'll break down the essentials.
Absolutely.
But, every self-employed journey is a little different. So this is just a good starting point.
Yes.
But for those like really specific situations, you probably want to get a tax pro involved
For sure.
to help you with those.
100%. You need a good CPA on your side.
Yeah, they're like the quarterbacks of the financial world,
Yes.
All right, let's tackle the most basic question first.
Okay.
What does the IRS actually consider self-employed?
Yeah.
Is that only people with like full-time businesses?
Not necessarily.
Okay.
The IRS actually has a pretty broad definition here. They're going to consider you self-employed
Right.
if you carry on a trade or a business as a sole proprietor or an independent contractor.
Okay.
And it doesn't have to be your main gig.
Okay, so like a side hustle could count.
Totally.
So even if you're like working a regular 9 to 5
Uh-huh.
and then like in your free time you're
Yeah.
selling your crafts on Etsy, you could be considered self-employed by the IRS.
Yeah, exactly.
Right.
It really comes down to whether your activity is intended to make a profit.
Gotcha.
That's what they're looking for.
You're turning your passion into profit.
Yes.
Not just like playing around.
Not just a hobby.
Yeah.
Okay, so once you've figured out, hey, I am part of this self-employed group,
Mm-hmm.
what taxes are we actually responsible for paying?
So it's a little different than when you're a traditional employee.
Okay.
Because when you're self-employed, you're kind of your own boss.
Right.
And you're also your own payroll department.
So this means you're going to be responsible for paying taxes on your earnings as you go, instead of having taxes withheld from each paycheck.
Right. The, was it the pay as you go?
Pay as you go, yep.
Okay. That always makes me think of like a laundromat.
Yeah, yeah.
But what are the specific taxes that we need to be keeping track of?
So there are two main taxes you're going to be responsible for: income tax and self-employment tax.
Okay.
Self-employment tax is often shortened to SE tax.
SE tax, yeah.
Now, for income tax, you'll file your Form 1040.
Yep.
And then you'll use Schedule C to figure out your profit or loss from your business.
Okay.
So Schedule C is kind of like your business's report card for the year.
I like that. Form 1040, Schedule C, those are the MVPs for income tax.
Yeah.
But what about SE tax? Is that something completely different?
SE tax is like the sibling
Okay.
to Social Security and Medicare taxes
Okay.
that get withheld from employee wages. But remember, we're our own bosses here.
Right.
So we don't have an employer contributing those taxes on our behalf.
So we're covering both sides of the tax coin.
Exactly.
All right. So tell me a little bit more about this SE tax.
Oh, okay.
It always seems a little mysterious to me.
I know, it can be a little confusing. But basically, SE tax is your contribution to making sure those essential safety net programs, Social Security and Medicare, stay strong,
Okay.
both for you and everyone else down the line.
Right.
The rate for 2023 is 15.3% of your net earnings.
Okay.
And that 15.3% breaks down to 12.4% going towards Social Security
Gotcha.
and 2.9% going towards Medicare.
Okay. So 15.3% of earnings. So like for every $10,000 you bring in, you're setting aside $1,530 for SE tax.
That's right.
That's a pretty significant chunk of change. Are there any, like, I don't know,
Yeah.
limits on how much of your income is subject to this tax?
Yeah, so there are some things that can help soften the blow a little bit.
Okay.
The good news is that there's a cap on the Social Security portion of the SE tax.
Okay.
So for 2023, that cap is $160,200.
Yeah.
Any income you earn above that amount isn't going to get hit with the Social Security part of the SE tax.
So if you're a high earner,
Yeah.
you're still contributing to Medicare no matter what,
Right.
but there is a limit on how much you're putting into Social Security.
Exactly.
Hmm.
And then another thing that helps is that you can actually deduct half of your SE tax
Okay.
on your Form 1040.
Okay. That's good to know. It's like a little pat on the back from the IRS
Yes.
for all your hard work.
Exactly.
Now, I've heard about this additional Medicare tax.
Yes.
When does that come into play?
So that's where things get a little more interesting.
Okay.
This additional Medicare tax is an extra 0.9% that gets added on top if your self-employment income goes over a certain amount. And that amount, that threshold, depends on your filing status.
Okay, so it's not one size fits all.
Right.
What are these income numbers that we need to know about?
So let's break it down by filing status for 2023. For married couples filing jointly,
Okay.
the threshold is $250,000.
Right.
If you're married filing separately,
Mm-hmm.
it's $125,000.
Okay.
And for single filers, heads of household, or qualifying widowers, that number is $200,000.
All right. So if your self-employment income is above those amounts, you're going to be dealing with this additional Medicare tax.
That's right. But remember, that additional Medicare tax is only going to apply to the income that's over those thresholds.
Okay.
You won't get taxed on all your income at that 0.9% rate.
Gotcha. It's like a progressive tax within a tax.
Right.
Now, we've been talking about how much we pay.
Uh-huh.
But how do we actually calculate those net earnings that determine how much SE tax we owe?
Right.
Is it as easy as just like adding up your income and
Right.
subtracting your expenses?
Sometimes it is that easy.
Right.
That's called the regular method.
Okay.
It's a pretty straightforward calculation of your business's profit or loss.
Mhm.
But the IRS actually gives us 3 different ways to figure out those net earnings. You've got the regular method,
Yeah.
the non-farm optional method, and the farm optional method.
Wait, hold on. Optional methods.
Yeah.
Why would someone choose to do that instead of just doing the regular method?
So those optional methods can be really helpful if you're maybe just starting out,
Mhm.
or if your profits are still pretty low,
Okay.
or even if you're experiencing losses.
Gotcha.
They could help make sure you're still contributing to Social Security
Okay.
and getting those credits, even if your business isn't doing super well at the moment.
So it's all about making sure you're playing that long game with Social Security,
Yeah.
even if your business is in those early stages.
Yep.
Okay, so tell me more about this non-farm optional method.
Okay.
How does that one actually work?
Instead of basing your SE tax on your actual profit,
Okay.
this method lets you figure out your net earnings as a percentage of your gross income.
Okay, so a percentage of your gross income. Is it always the same percentage?
Well, that's where it gets a little tricky. The percentage you use
Okay.
actually changes depending on how much gross income you have.
Gotcha.
Let's say your gross non-farm income is $9,840 or less. In that case,
Okay.
you would use 2/3 of your gross income to figure out your net earnings for SE tax.
Okay, so 2/3 of gross income if you're below $9,840.
Right.
What if your business is doing a little better and you have a higher income? What percentage do you use then?
Well, that's where the IRS throws us a bit of a curveball.
Mm-hmm.
So if your gross non-farm income is more than $9,840,
Okay.
your net earnings under this optional method
Okay.
are going to be capped at $7,103.
So even if my business is bringing in like way more than $9,840,
Yeah.
my SE tax is still calculated as if I only made $7,103.
Exactly.
That's wild.
Yeah.
It's like a little safety net.
It is. It is.
But with the ceiling,
Yeah.
okay, that's interesting. What if someone has like a farm
Yeah.
and a non-farm business?
Yes.
Can they use both of those optional methods?
You can. So if you qualify to use both the farm and the non-farm optional methods,
Okay.
you actually can use both of them to figure out your total net earnings from self-employment that are subject to SE tax.
So double the optional methods, double the fun.
Pretty much, yeah.
What are some things that I need to keep in mind
Okay.
if I'm working with both farm and non-farm income?
So first off, you don't want to combine your farm and non-farm earnings when you're using either of the optional methods. Keep those separate.
Okay, got it. Separate calculations. What else?
The optional methods can give you a bit of a break on SE tax,
Uh-huh.
but you can't report less in net earnings from self-employment than you actually had.
Okay.
So, for example, so even if your calculations for the farm optional method and the non-farm optional method add up to more than that, you still can't use more than $6,560.
There are a lot of moving parts here.
There are.
It seems like having a tax pro in my corner would be a good idea.
It definitely can be. It can really help to have someone walk you through all the different scenarios.
Tax pros.
Mm.
They're like the Sherpas of the tax world.
Exactly.
Okay, so let's talk about some of the special rules or exceptions that apply to SE tax.
Yeah, okay.
Are there any professions that are just like exempt from paying it?
There are. There are a few interesting examples highlighted in Publication 334.
Okay.
Like, for instance, if you're a notary public,
Okay.
you'll still report those notary fees on Schedule C,
Uh-huh.
but they're not subject to SE tax.
Okay, that's a nice little perk.
Yes, it is.
What about public officials?
Yeah, so generally speaking, public officials don't report their earnings on Schedule C.
Okay.
So they typically don't have to worry about SE tax. This would apply to people who are serving in an elected or appointed position
Okay.
and getting paid by a state or the federal government.
Are there any exceptions to that rule?
There is an exception, so you want to be careful about this.
Yeah.
If you're a public official who is working for a state or local government,
Okay.
and you're paid solely on a fee basis,
Mm-hmm.
your earnings could actually be subject to SE tax.
Okay.
This would be the case, particularly if your services are eligible for Social Security coverage under a federal-state agreement,
Okay.
but aren't actually covered by Social Security.
So if you're in a fee-based public service type of role,
Yeah.
it's really important to check the specifics
Yeah.
to see if you're going to have to pay SE tax on that income.
Exactly. Exactly. Now, here's another kind of interesting exception for members of fishing boat crews.
Fishing boat crews, okay.
Yeah.
What makes them different?
So their compensation structure actually has a big impact on whether or not they have to pay SE tax. So they shouldn't be getting any pay for their work except for a share of the catch.
Okay.
Unless that pay meets certain specific conditions.
Okay.
And they have to actually receive a share of the catch or the proceeds from selling it.
So it really comes down to how they're getting paid.
Right.
And if they're actually sharing in the profits of the catch.
Exactly.
Okay. What about people who are working abroad?
Yes.
Are they still subject to U.S. SE tax even if they're living in another country?
So generally speaking, yes, U.S. citizens and resident aliens are going to be subject to SE tax on their self-employment income, regardless of where they live.
So even if I'm running my online business from a beach in Bali,
Yep,
Uncle Sam's still going to want his cut.
that's right. But before you pack your bags and renounce your citizenship,
Okay.
there is a really important exception to keep in mind here. The U.S. has these agreements with a bunch of other countries
Okay.
called totalization agreements.
Right.
And their whole purpose is to make sure people don't get taxed twice on their Social Security earnings.
So it's not about avoiding SE tax. It's about not getting double taxed.
Exactly.
Paying it to both the U.S.
Correct.
and to the country where you're living.
Exactly. So if you're living and working in a country that has one of these agreements with the U.S., you're generally only going to pay Social Security and Medicare taxes to that country where you're actually living.
Okay.
And they'll usually issue you a certificate to prove that you're exempt from paying U.S. Social Security tax.
That's a huge relief.
Yes.
For those global entrepreneurs.
Yeah.
Okay, so what about people who have income from multiple businesses?
Right.
Do they treat each business separately, or do they kind of lump everything together?
So if you have earnings from more than one trade or business that are subject to SE tax, you have to combine the net profit or loss from each when you're figuring out your SE tax.
Okay, so even if one of my businesses is in the red,
Yeah.
I can use that to offset the profits from my other businesses when I'm calculating how much I owe in SE tax.
Exactly. You'll still file a Schedule C for each separate business.
Okay.
But then you'll only have one Schedule SE to report your total SE tax earnings.
Gotcha. Streamlined filing,
Yes.
but still a clear breakdown of each income source.
Exactly.
Okay, one last scenario I want to touch on before we move on.
All right.
What about community property income?
Okay, so this is where those state laws come back into play. If you live in a community property state
Okay.
and any of your business income, not including partnership income,
Okay.
considered community property income, it has to be included in the SE tax earnings of the spouse who's running the business.
So even if both spouses technically own the income,
Yeah.
the one who's actually doing the work is the one who's responsible for the SE tax.
Exactly. Exactly.
This is so interesting. We've covered so much ground here.
Yeah, we have.
Just from the basics of what SE tax is,
Yeah.
these different ways to calculate it, and all these little exceptions.
Yes.
I feel like I'm much more prepared now
Yeah.
to tackle my tax obligations.
Good. I'm glad to hear it. And remember, everyone's situation is a little bit different.
Right.
So even though these general guidelines are super helpful, it can be really valuable to talk to a tax professional
Yeah.
and make sure you're doing everything right for your specific situation.
I completely agree. Okay, so now that we've demystified the calculations,
Wait.
let's move on to actually paying those self-employment taxes.
Okay.
Stay tuned as we explore the different ways to pay and share some tips on making this whole process as painless as possible.
Sounds good.
All right, welcome back to the last part of our self-employment tax journey.
Yes.
We've tackled the what and the how much.
Right.
Now it's time for the grand finale, the how, actually paying these taxes.
Yes. The fun part.
The fun part, yeah.
No, but as we kind of hinted at earlier,
Yeah.
the IRS is all about going digital these days, and they really want us to ditch those paper checks
Right.
and pay electronically.
Makes sense. It's definitely faster, more secure.
More secure. Yeah.
Easier to track.
Easier to track.
Let's explore some of these electronic options that the IRS has for us self-employed folks.
Okay, so one of the most popular options, and it's really user-friendly,
Okay.
is the Electronic Federal Tax Payment System,
Okay.
or EFTPS for short.
EFTPS sounds kind of like a secret government agency,
I know, right?
but I'm guessing it's not as intimidating as it sounds.
No, not at all. You can enroll online or by phone,
Okay.
and then once you're in, you can make payments online, over the phone,
Right.
or through their mobile app.
So convenient. No more running to the post office. Or fetch it.
Exactly.
Yep.
And you can even schedule payments in advance with EFTPS.
Oh, cool.
So if you know you've got a big tax bill coming up, you can kind of spread out those payments,
Okay.
make it a little easier on your budget.
That's amazing for cash flow.
It is.
Okay, so what about people who like a more simple approach? What would they do?
Well, for those folks, there's IRS Direct Pay.
Direct pay. Okay. Straight to the point. Tell me more.
So this is a free service that lets you pay directly from your checking account or savings account,
Okay.
right through the IRS website or their IRS To Go mobile app. You can use it for income tax, estimated tax,
Oh, and it
extension payment.
covers all the bases. Any catches?
No catches. And because you're paying the IRS directly,
Right.
there aren't any third-party fees to worry about.
Okay, now let's talk about those of us who love our credit card rewards points. Can we pay our taxes with a credit card?
You can. The IRS does let you pay with a debit card, credit card,
Right.
or a digital wallet.
Right.
But you do have to go through a third-party payment processor,
Okay.
and they will probably charge a fee for that.
Okay, so you got to factor those fees in when you're thinking about
Yes, you do.
if it's worth it to get those points or not. Are there any other electronic payment methods?
One more. Electronic funds withdrawal. This option is usually available when you're filing electronically, either through tax software or with the Tax Pro.
So it's like setting up an automatic payment for your taxes.
Pretty much, yep.
Easy. This has been an incredible journey through the world of self-employment taxes.
It has.
We've covered it all.
Yeah.
The definitions, the calculations,
Right.
the different payment methods.
All the good stuff.
Yeah.
And just remember, the IRS puts all this info in Publication 334.
Yep,
So you can definitely check that out for more detail on anything we talked about today.
for sure. And if you're ever feeling lost or confused,
Yes.
don't be afraid to call in the professionals.
Yes, a good CPA can be your best friend.
Yeah, they can. They can help you navigate all this stuff and make sure you're all good with the IRS.
Exactly.
All right, folks. Well, that wraps up our deep dive into self-employment taxes.
It does.
We hope you learned a lot,
Yes.
feel more confident about tackling your tax obligations,
Uh-huh.
and maybe even picked up some new tips and tricks along the way.
Absolutely.
Happy filing, everyone.
Happy filing.